on hitting this milestone. But the question here on is this a sustainable run rate, this 30% footfall growth? Because, you're already sitting on quite a high base.
Yeah, so we were about 25 million people visiting our theaters about 5 years back. This year we're going to be about 75 million people. So we will maintain the rate of growth. Obviously 30% will not be sustainable, but in terms of revenue growth with a much higher base, I think 15 to 18% is the kind of a CAGR which we'll target to grow over the next 5 years. And I would like to say this is just the beginning in India, because we're still 2,200 modern day multiplex screens for a massive country like India. So the headroom for growth is huge when you compare with what's happening all over the world.
Okay, Nitin, good morning. I just wanted your comment on what happened recently in Karnataka and in the budget where I think the price was capped. How much would that impact you, and do you see that as a risk for some other states as well?
Yeah, so that announcement actually came as a shock, because Karnataka has been one of the most investor-friendly states for us, and the cinema business in Karnataka has done really well. Some of the largest multiplexes in the country are in Karnataka because of the multilingual population that exists in that city. So this came as a complete shock to us. Having said that, I think we've made representations to the government explaining them why this could be very detrimental to the growth of the industry, and the government is currently looking into the same. So we are hoping that by the time an actual notification comes out, some of the concerns will get addressed.
Okay, well, this may be a bit medium term, but would you worry that this entire model could be in danger from, say, the Netflixes or the Relgios? You may get the movies with a little bit of delay, but you do get them.
Yeah, so it's an interesting question, and clearly technology is evolving and changing. How people are consuming entertainment and movies is also evolving and changing. But there is a very interesting study which is now available. I think every year the Motion Picture Association of America does and publish the theater going statistics in US, which is one of the most advanced markets. And that market has consistently been able to sustain its theater admissions in spite of some of these technologies being existing, because theaters are clearly differentiating themselves as out-of-home entertainment, and that's very promising. And the study actually indicates that you will consume content on Netflix, on your mobile devices and handsets, but you will also come to theaters to watch movies to get that great experience. So our consumer is actually very common, and he would like to watch movies in all the formats.
Okay, all right. Well, just quickly on the numbers, what is currently your revenue per minute in advertising compared to year ago levels or quarter ago levels, and how many number of minutes this year vis-a-vis last year?
Yeah, if you look at our average growth in advertising revenue overall, this year is going to be about 18 to 20%. Some of it is definitely on account of new stores we've added, but we are achieving anything between 8 to 10% same-store growth in revenues. Average utilization is a very tricky question, because it is very, very varied depending upon which part of the country we are in and what is the property profile. But I would say that there's a huge headroom for us to grow even there as well.
Is there scope to increase your F&B revenues as well? Because that has been growing at a 20% run rate. Can you do better than that? And also, your F&B spends per head were down a bit over the last few quarters because of the discounts. Will you continue to give discounts there?
Yeah, I think our F&B strategy is evolving, and the core philosophy around our F&B strategy is to get the customer spending on F&B to at least 50% of what he's spending on the ticket. About 5 years ago, that ratio used to be 25%. In the last 5 years, we've been able to graduate that to 40% of ticket price. And hopefully in the next 3 to 4 years, we want to get it to 50%. So we definitely see greater headroom for growth in our advertising and F&B revenue, on top of a good box office.
Well, we are not enjoying doing it, I can tell you as a consumer. Well, if you extract it, we'll pay up, but we are not doing it with pleasure. Okay, acquisitions?
I think we'll be more opportunistic in that area. I think if we find a great fit, an asset that complements our existing circuit, we'll be very opportunistic, subject to right valuations. But that's really not the cornerstone of our strategy any further. I think all the good assets which we thought were relevant, we participated in them, and the long-term focus would be to build organically and expand our network beyond big cities now to also look at tier 3 and tier 4.
Okay, which takes us to the next logical question, that now that you are done with inorganic moves, Wanda's name keeps coming back, and with this last tranche of sale that promoters had with multiples, that buzz even got louder. I know Ajay Bijli denied it, but anything along that lines?
Yeah, actually, companies made several statements to that effect. And I think Ajay was very candid post that transaction, that actually that transaction where Warburg has come in as a long-term investor should actually kill these rumors, because now we have two big strategic financial investors with us to take us to the next level of growth. So clearly, I think there is no truth in any of these rumors that have been floating around.
All right. Pleasure speaking with you, Nitin Sood. Thank you very much for joining us with all your details on the movie exhibition business.